Welcome to Pioneers in Payments, where payments experts share their insights. Now, here's our host, Donna Blum.
Hello, everyone, and welcome to this edition of Pioneers in Payments. My name is Donna Blum. I'm your host today, and I have the great pleasure of being joined by Chris Colson from the Federal Reserve Bank. Welcome, Chris.
Hi, Donna. Thank you. Thanks for having me today. I appreciate this opportunity.
Well, I'm so glad you're able to join us. And, to get us started, I would love for you to just introduce yourself to our audience. Could you tell us a little bit about who you are, your background in the payments industry, and also what you do at the Federal Reserve?
Sure. So I'm Chris Colson. I work for the Federal Reserve Bank of Atlanta. I'm in our research department. I have over 30 years of payments experience. And before we begin, I just want to say that the views and opinions expressed here today are mine and mine alone and don't reflect those of the Federal Reserve Bank of Atlanta or the Federal Reserve financial system itself. So my background is in payments and in innovation. So it's a very unique combination. I started on the retail banking side, moved to the treasury side, and gained a little bit more experience to understand both sides. And then after a while, I left JP Morgan and came to Atlanta and was part of a startup. And that startup, we built a core for banks. And what was unique about that opportunity was I finally got to understand from the other side of the coin, if you would, like what does it take really to develop products and services for banks? And more importantly, why did it take so long when you wanted to do an upgrade, to have that implemented? So it was a great experience for me. And then after a while, that company got bought. I went to Equifax, where I was one of the early guys that helped put together an innovation process there. And then I went to TSYS, which is now Global Payments, and I led their global innovation program. So we were in, probably over a dozen markets around the world. And that really gave me insight for the first time into payments, but from different countries' perspectives. So, for example, when we were working in China, QR codes about 15 years ago were really, really popular there. In Japan, they were using virtual cards as opposed to physical cards. And then like in the EU, there was EMV or Europay, MasterCard, Visa, which, as you know now, is our chip and pin in the United States. So it really gave me different perspectives and to help me understand like what was going to come eventually to the United States to kind of get ahead of that. And then after that, I worked at AFLAC for a while, leading their innovation program and a fund there that we use to invest in various startups. And what was unique about that was we were applying these startups in different forms. So, for example, we were using facial recognition to identify consumers. We could tell your age, gender, BMI, if you were a smoker, so that we could maybe sell you life insurance. So then I started to figure out how to apply some of those technologies to the payments industry itself. And now I'm at the Federal Reserve, where I work in the research department. My focus is primarily on emerging alternative payments. So things like payments on blockchain, stable coins, autonomous finance, virtual reality payments, augmented reality payments. So kind of that leading edge stuff. So we report on it because we want to make sure that we understand, there are opportunities there for our payment rails. And then more importantly, are there any risks that may be associated with that? So then we publish some research. In our group, we do blogs. We put one out every week, and topics can range from credit cards to payment studies that we conduct. And then again, my focus is on things like automated push payment, stable coins, crypto, things like that. So a really diverse group on the research that we do.
Wow, that you have an incredible background in the payments industry. All of the names of the companies you've worked for formerly are industry leaders, and it sounds like you've really watched the industry sort of grow up, and now you're on like the forefront of what's coming next. So that's exciting.
Yeah, it is very exciting. And again, because of the role that we play at the Federal Reserve and the payment rail, I get to bring that outside experience in. And then also I get to work with some fintechs, incubators, accelerators, and meet with them just to understand like what's being invested in the market. What do we think is going to kind of be that next big thing, if you would? And then we also work with some of the universities in the state of Georgia on projects. And we'll do payment behavior studies, for example, or we'll look at things like how can we prove financial access to the unbanked, underbanked. And this is really good for students because it gives them that real practical, experience and helps them build their resume. And at the same time, for somebody like me, it helps me better understand what are the payment methods that these students are looking forward to and to actually utilize. Again, bringing all the data back in so that we're better prepared for, the future.
That's great. You're training up the next generation of payment
Exactly.
experts. Okay, well, one of the reasons why we're doing this podcast is to really sort of distill all that's happening in the industry today. And as you know, there's a lot of new trends, a lot of new technology, innovation. From your perspective, Chris, what would you say is the most notable trend in the payments industry today?
Yeah, so right now I would say stable coins. There's a lot of activity in the market. Last Friday, there was the first crypto summit at the White House where they were discussing various things. But stable coin seems to be that latest, if you would, technology, payment technology that you hear a lot about. And it's really being used for cross border payments. And I'm specifically talking about the US dollar pegged, which means that a dollar gets put into the bank and then a coin is minted against that. So it's not the volatile or the other risky ones like the commodity backed or the crypto backed or the algorithmic backed, only the US dollar pegged one. And, when we look across, we see different trends that are emerging, especially cross border, because the technology uses blockchain for these cross border payments. And with the advancements in blockchains like scalability and things like that, we're seeing the cost decrease, but also they're more transparent, they're more secure, and they're available 24/7. So we see a lot of activity with that. In fact, about 1% right now of the US currency is backing US stable coins. So about $210 billion is currently being banked for stable coins. I do think in the future, we also see some retail activity with stable coins. So, for example, over Christmas, Regal Cinema did a deal where if you paid using stablecoin, they would give you 10% off. Retailers like Chipotle and others are also starting to accept stablecoins. So while I would say they're kind of like for the first movers, if you would, we are starting to see retailers embrace that. And I think a lot of that has to do with the younger generation is just more comfortable using those kinds of currencies, if you would, but also it's cheaper for the merchant. And those are kind of factors that drive the different payment methods in the industry, right? What is it that consumers want to use to pay with? And then more importantly, what is it merchants are willing to accept as a form of payment? And how does it help them lower their costs on their end? So it's one of those things, stablecoins actually bridges the old and the new, if you would. And I would say it's probably crypto's killer app right now.
Wow. That's interesting. I have never bought anything using stablecoin before, but I might have to venture out into that and give it a try. And now that I know that some of these merchants are making it available as forms of payment, that's
Yeah, like I
great.
said, we're primarily seeing it being used in cross border. The retail experience is a little kludgy right now. It's not as simple as just loading something in your wallet and being able to pay. But like any new payment method, right? You always have that in the beginning. Like I think back about Apple Pay when it first came out and you entered your credit card information, and it could take up to 24 hours to be approved, right? So over the years now, you can take a picture of it, use an optical character recognition, automatically puts it into the wallet. So I think it'll just be a matter of time, maybe 5 or 10 years, and we'll start to see more people using that as a retail payment method.
No, that sounds great. That's what's coming. You heard it here. We're predicting the future. So now, kind of moving on. Obviously, there's a lot of our viewers are payment organizations, financial services companies, and they're trying to navigate, choices that they make every day as to where the industry's heading and what types of things they should plan for. And so, one of the goals of this podcast is to really help them identify the path forward. And so, I wanted to get your impression or your advice on what you think is the greatest opportunity for these organizations today.
Yeah, so my impression would be autonomous finance. And when I say that, I mean that in the context of where you use like artificial intelligence and machine learning and other smart technology to automate those repetitive tasks, if you would, right? To create a self-learning a system. And that'll help optimize financial processes with minimal human intervention. And in particular, I see autonomous finance being used from a merchant perspective, like real time or a processor perspective, real time payment optimization. So with autonomous finance, it can actually determine which is the cheaper and faster network to use. And this can help really reduce costs and the delays in the payments themselves. From a merchant's perspective, I see autonomous finance helping with things like structured settlements. So maybe one merchant doesn't need the funds right away. So through autonomous finance, it can recognize that and maybe do some overnight investments in commercial paper to help them earn a little bit more revenue, if you would. Or if it can determine like they need to meet payroll on Friday, it can request to have those funds transferred like early Friday morning to be able to meet payroll. And then lastly, from a consumer perspective, from autonomous finance, like making consumers more powerful with their finances. And what I mean by that is if my mortgage is due on the 15th, for example, and I pay it on the 1st, with autonomous finance, it can look at my data and say, hey, Chris, you probably shouldn't pay that until the 15th. And we can do that using real-time payments or instant payments. But for those next 14 days, we're going to invest it in commercial paper and you're going to earn 2.3%. So it really helps me maximize the finances that I have, because a lot of these things consumers aren't aware of and they don't always necessarily make the best financial decision. And to me, with instant payments and some of these other technologies, being able to pay things just in time or right on time, so you avoid those delays. Also with autonomous finance, it can help to make sure that you never have a late payment, right? So it can do things on your behalf as well. And also it can help with things like maximizing credit cards, like which one is the best one I should use if I'm interested in traveling or cash back and things like that. So just providing that like extra layer of advice, if you would, using AI, machine learning, and that's personalized to me. So it's not just generic, like, oh, everybody should pay their mortgage on the 15th. It's more applicable to Chris Colson and my behaviors directly. So I think that's a real large opportunity for processors and other organizations right now.
Oh, I can see that being the case too. It's like smart payments, right? It's
Right,
like,
right. And
yeah,
when it benefits the consumer, like they have a better feeling and they'll have a stickier relationship, with the banks and the processors and stuff that they're using, because now they truly understand that they have their best interest in mind when you get
right.
using things like autonomous finance.
That's great. Okay, so we talked about the greatest opportunity.
Yep.
From your perspective, what is the greatest challenge?
Yeah, this is a tough one. But if I had to pin it down, I'd say balancing innovation with regulatory compliance and security. It's a constant juggling act between the three, right? On the one hand, companies need to innovate quickly to meet customer demand and their payment preferences, because everybody wants a seamless payment today. No one wants to have to think about pulling out a card or entering numbers in. And this can be whether it's like a real-time transaction or a new payment method, like I mentioned, like stablecoin. Then on the other hand, right, you have to navigate that complex web of regulations like across different markets. So for example, in the EU, you have PSD2, which is the Payment Service Directive 2, and that dictates, how you're going to make a payment cross border. Here in the US, we have AML, anti-money laundering, and KYC, know your customer regulations. So when you mix all these in, it really, really becomes more complicated to make sure that you're, in compliance, if you would. And then also you have to stay ahead of cyber threats, right? Because everything online today, you read all these stories about these vulnerabilities, data breaches, and things like that. So balancing the innovation with regulatory compliance and security, I would think, that's the biggest challenge for organizations today. And really, if you look at it, if you mess up on one, like you have to face regulatory fines. If you have a security breach, you lose the trust of your customer. And then you have to deal with compliance costs, right? And all these things eat into margin. So meanwhile, competition remains fierce. Everyone out there is trying to lower fees, right? That's what I love about innovation and payments. It's kind of one of those things that's never stagnant. It's always evolving. And then you have to invest heavily in payment fraud. So this goes back to some of that autonomous and the AI and the machine learning, being able to use those tools, if you would, to, help combat and meet and just maintain that balance between those three.
As you were describing that, and you're talking about, those three items and the balance. I was just envisioning a three-legged stool, and it doesn't work very well if one of those legs is missing. So, yeah,
Exactly. And it's not one of those things where you put a strategy on it and it's done. As I mentioned, there's new data requirements that everybody has to follow now to protect the consumer. A while back, there was something called the 1033 rule that said, consumers have the right to share their financial data with whoever they deem that they want to share it. And everybody thought that was a great thing. But then on the back end, I also have the right to tell that third party, I no longer want to share my data with you. So you have to go back and you have to delete all that data. So like that's another big hurdle from a compliance perspective, because sometimes once that data is there, if it's used for credit decisioning and other things, it gets mixed into other systems. And then if I, as a consumer, say, oh, I no longer need your services, thank you, you have to go back and make sure that that's been deleted everywhere. So again, that three-legged stool, as you said, right? It's not a one and done strategy, and it's constantly evolving. So it's one of those ongoing things. And again, that's why I love innovation. Because of those three legs, you always have to innovate.
Yes. Yeah. So true. Well, okay. So now my favorite question, because Chris, you have years of experience in the industry. You worked for a lot of different companies. You're involved with all this cutting edge, technology. But if you had to narrow it down to one silver bullet piece of advice that you have for our audience, what would that be?
Yeah, so I would say build adaptability into your system. Like take advantage of things like open banking, APIs, and other things like that, just so that you can pivot and meet the ongoing demands and needs of the market. And a great example, if you build things in a modular fashion, you can update, say, your fraud rules much quicker, right? So using tools like AI, machine learning, it can start to identify behaviors where in the old days that was static and you had to manually input like what the rule was to prevent fraud. And by the time you did it, the fraudsters figured it out. So making sure that, you are prioritizing a modular perspective. I mean, about 10, 15 years ago, when fintechs really first started, a large institutions just went out and met with them. They used to call it the fintech petting zoo. Like they went out and introduced themselves and said who they were. And they didn't really embrace it. But now we've come to the point with payments evolving as quickly as they are, right, that they almost need to be able to keep up with the demands of the processors, the merchants, the consumers, everybody that's involved. And that's why payments to me is so exciting, because there's going to be constantly someone looking at something and saying, I think there's a better way to do that. Or consumers will tell you and vote by not, making a purchase because you don't offer a particular payment method. So being flexible and have that modular capability built in so that you can almost plug and play where you need it on the go. As I mentioned, when I first came to Atlanta with that startup, when we built the core, it was a single stack. And anytime you made a change, you had to go back and test all those thousands and thousands of lines of code. So now with some of the newer technology, it's literally plug and play. So it's a lot more exciting. And at the same time, for processors' perspective, it makes them a lot more adaptive to the changes that are in the industry today, not only from regulatory, but also from a consumer merchant perspective.
I'm definitely a proponent of modular designs. The company I represent has a modular software suite.
Right.
So
right, firsthand.
We concur.
Good.
Okay, but before I let you go, Steve, this has been a great conversation, by the way, and thank you so much. But before I let you go, I do want to make sure that our audience knows how they perhaps could get in touch with you. Sure. Or learn more about the Federal Reserve and FedNow, for example. So sure. What information would you like to share with our audience?
Yeah, so if you'd like to learn more, we have atlantafed.org. And there's a whole host of information related to instant payments, to payment studies, to what's going on in the economic environment. There's the Beige Book and a lot of other things out there that people can download. But if you're more interested in like the topics like we're talking about today, you can go to atlantafed.org/blogs/take on payments. And we post a new blog every week. So again, the topics we cover could be credit card, could be compliance, could be a new payment method. Really it runs the gamut because we all have kind of our own specialty in the group, which makes us really, really unique. And then we also ask usually at the end of the blog if anybody has any feedback or another topic that you'd like us to report on. We would love and welcome that, input and feedback as well.
That's good to know. I might have some ideas.
All right.
Well, again, Chris, I just want to thank you so much for your time today. This has been just really insightful and a lot of fun to kind of hear about where the industry's heading in the future. And I also just want to thank all of our watchers today, all that may be listening or have tuned in on YouTube. We just appreciate you tuning in. Thanks so much. Bye now.
Thanks, Donna. Bye.